So this will be the last stock pick video that I do for 2020. One of the names on this list is actually a company that's over 200 years old. So as I go through the list, you guys can kind of take a guess at which one that is. I own 7 out of 10 of these names, just for full disclosure. The other 3 are ones that, through the many metrics that I look at as I constantly comb over the stock market, I'm constantly looking for those themes or pockets of value. And I think you guys are going to find that as I cover these 10 stocks that are worth looking at going into the month of December. So please stand by as we cover the 10 stock picks for December. So we're going to jump right into it. When I go through my multiple screeners, I use multiple websites to try to evaluate stock. I do read analyst consensus. I do read fair market estimates for stock. I predominantly use my internal brokerage metrics for my evaluation, but I typically don't get too deep into. I just pull the highlights of what I find for each of these companies. These videos obviously do come with the caveat to do your own research. This is just what I'm looking at. And like I said, enough to invest out of 7 out of 10 of these names. And the other ones really do come high on my perspective list for looking to buy. And I'll disclose those names for you guys, the ones that I don't own and the ones that I do own. The one in healthcare that I'm really bullish on right now is Bristol Myers, founded in 1887. It does yield 2.89%, so a nice healthy 3% dividend, just shy of. The payout highlight was for 11 years. And the payout ratio, which really stuck out to me, was an anemic 28%, so just shy of 30% of total earnings paid in the form of a dividend. I do have a 50 share position in the company here. Bristol Myers is doing all things healthcare, all ailments, from health ailments to cancer treatments. That's not going anywhere. So Bristol Myers, being kind of a premier player, traded under the ticker symbol BMY. And I do have a personal stake in this company. The second is in the telecom space here, and it's actually an international play. This is a French telecom company that I've spoke about many times in the history, and I think a lot of people probably are unaware. This is one of the largest telecom companies out there. It is the largest in France. It's traded under the ticker symbol ORAN. This company is just a little over 20 years old. It does sport a dividend yield of 7.64. Now, for anybody that's looking to get engaged in the telecom space, this probably doesn't need to fulfill a primary position in front of a Verizon or an AT&T, which is also on my list here. But trading at 11 times forward earnings, they're doing some great things in my review in the investments that they've made in the 5G infrastructure. They are the #1 service provider in France, and I think the orange is worth taking a look at, traded under the ticker symbol ORAN. The next on the list is Philip Morris, traded under the ticker symbol PM, founded in 1987. Actually, it split off from Altria Group. It is the international variety of all things tobacco. It has paid its dividend for 12 years running. Okay, so a pretty good track record in the making here. We always highlight the payout ratio, which has actually dipped a little bit. Actually, good news at just 93%. It was right up close to 100%, which was somewhat alarming. But Philip Morris is showing up on every single buy list. Very bullish sentiment on the street on Philip Morris. I do own the company at just shy of 16 times forward. The next is in the telecom space, and I think this is probably the #1 buy in the space. For those of you guys who aren't interested in investing in bonds right now with interest rates being so low, it's interesting to consider some of these telecom and even some of the regulated utilities to purchase instead or in lieu of purchasing bonds. Kind of works as a proxy in that manner. 7.04 on the yield for AT&T. It's a beast. 210 billion for the company. It's paid its dividend for 20 years straight. So a very good track record. It's 5 years away from becoming an aristocrat. 65% of the earnings that ATN brings in get paid out in the form of a dividend. It is a juggernaut, and it's trading right now at an anemic 9 times earnings. So very, very bullish on this company. I own over 300 shares of AT&T and will continue to own them going forward. It's easy, sleepy money in AT&T. Pretty good, worth looking at right now with the environment that we have. The next two on the list I'm going to roll out together. This used to be one company. They are traded under separate ticker symbols. The first being ConocoPhillips, ticker symbol COP, and the next is Phillips 66, which is traded under the ticker symbol PSX. Okay. Now, energy has got a little bit of footing here. This is not for the faint of heart, and obviously not covering some of the larger majors that I own, Chevron, Exxon, and Royal Dutch Shell, respectively. I have some fairly large positions in those companies. I do not own either of the two of ConocoPhillips and Phillips 66. What I will say is this: Conoco at 3.89 on the yield, very, very light on the payout schedule at 3 years on the payout. And then Phillips 66 at just over 5% on that yield at 7 years on that payout schedule. So interesting enough there. Those two picks right there kind of round out my top 5. I would certainly include Valero in that conversation. But ConocoPhillips and P6 is kind of a trend play a little bit in energy and in oil. The next on the list is healthcare. This is traded under the ticker symbol CVS. This is a great play. The valuation is just shy of 10 times forward earnings, payout ratio at 26%. It doesn't have a good track record of payout. So as far as a dividend growth perspective, you're kind of picking this thing up right now. It makes a ton of cash. It has no problem paying out that 2.68 yield. So it is a good dividend play, but there is some work that needs to be done. But very bullish sentiment, fair market value at about $80 right now, just passed over the $70 mark. So some value there, not quite as good as when I first rolled this out, when it was trading just shy of 60. But nonetheless, there is some value to be had in CVS. Next is the only tech play that I have on the list. Okay, I am fairly bullish on tech long term, but here in the short term, I think technology, you're really going to have to pick your spots. I am bullish on CRM Salesforce, but this company right here is a little bit more of a dividend play. I think getting involved in some safety plays right now is probably the best trend move that you could make for your portfolio, and Cisco Systems meets the bill. This is a global network and communication technology company. Sports a yield of 3.24, so very good. Cisco's been around. It's weathered the test of time, certainly in a very volatile industry. 9 years of payout, less than half of the payout goes to the dividend at 45.67%. Trades at just over 14 times forward earnings. So not quite as good. It's just surpassed that $40 mark. I wish people would have heeded my warning. I was picking it up in the mid 30s. That was really where the value was. But I still think that Cisco Systems has some room to grow here, as people are going to be seeking those old companies that exist and can really provide that safety in the portfolio. The next on the list is Lockheed Martin. This is in the defense subsector of industrials. And this play here is a way to get a hold of government contracts without having to play it through Boeing. I did liquidate my position in Boeing, and I just think I like what I'm seeing in defense. I don't own Northrop Grumman, but I do own the other three big: Raytheon, Lockheed Martin, and General Dynamics. Lockheed Martin, I think, being the premium play. Over a 100-year-old company, 1912 is when this was incepted. It's paid the dividend consistently for 18 years. 42.42 on the payout ratio with Lockheed, sporting a very, very healthy price to earnings, very, very attractive to enter into the stock right here at 15 times. I own a large position in Lockheed Martin at just over 20 shares. And the final company that I will add out of the financials sector is my number one financials play. No, it is not JP Morgan Chase. It is, in fact, Citigroup. Citigroup was founded in 1812. It is a diversified, it's a global retail provider as well as a commercial lender on the international side. It is a beast. It's paid out for an anemic 6 years. Payout ratio is 67.7, which is in line with industry peers. But the PE on Citigroup is 14 times, and it is my number one play. I've got just over 100 shares of Citigroup in this personally. So financials, worth putting Citigroup in the top 5 with the other premium plays in financials, as I do believe financials are getting a little bit of traction here. So we're going to want to put a little bit of highlight. You can see some of the themes here in the 10 stocks to look at for December. You know, we're looking at some low PE sectors, some old tech, etc., energy, telecom, healthcare, and financials, right? So we're looking at really trying to exploit and foot stomp some of those sectors that are trading at some reasonable price to earnings ratios going into 2021. I do expect some volatility, so it's going to be beneficial for all investors to really try to seek out that value in the portfolio going forward. If you enjoy the information coming through, you want to make sure subscribe, hit the notification bell, leave your stock picks in the description below. These are always very popular videos to gain awareness to what is out there across the landscape. Certainly want to do your own due diligence, add these stock picks to your watch list. No harm in that whatsoever. I own 7 out of 10 of these. So I do put my money where my mouth is. Okay, guys. So I want to make sure and share the message as well with anybody out there that may be interested in basic information on the stock market. Guys, thank you so much for tuning in to this 10 stock review for stocks to look at in December. Thank you so much for tuning in the video, and good luck in your investment future.